you ever think, Sean, that you would be streaming live on the internet talking about Chilean lithium?
Nope, never.
Hey everybody, JC Parets here, founder of AllStarCharts.com, and I am joined once again by my esteemed colleague, Mr. Sean McLaughlin. What's up, Shawnee?
What is happening, Big Daddy?
Big Daddy of a 2-year-old so far. See if we get a couple more coming in the next few days. I'll keep you guys posted. But in the meantime, we've got quite the situation here today. So we're in our team meeting, sharing ideas, things like that. And, how this came to be is I was talking about how some of the junkier lithium stocks and whatnot are looking good, particularly showing relative strength. It's not just Albemarle or anything like that, but lithium in general. And, we're talking with the boys and it's like, why are we going to mess around with the little guys? Why take on that risk when we've got some of the bigger guys winning? Let's go with that. So that's how we came to be. How we found the trade, on the other hand, I'll let you speak to this, is the fact that, we've bounced quite a bit. So the juice that we might be getting from selling some puts is not going to be as much as what buying the calls is going to cost. So we got a little bit of a twist on this particular trade. Let's walk through it.
Well, it's not so much that there isn't a lot of juice to sell in the puts. It's the fact that we wanted to be more aggressive with a closer to the market action long call. We wanted to buy the 105 call. And to make it work, the way I like to do risk reversals, and there's no rule that says you have to do them this way, JC, but the way I like to do risk reversals is I like to have my puts that I'm shorting completely pay for my call position. And most of the time we do it, 1-to-1, right? Like we sell one put and we buy one call, and it's pretty clean like that. But in this case, because we wanted to be a little bit closer to the action with the calls, therefore the call is a little bit more expensive, we are doing something that we don't do a whole lot, but we think it makes sense in this case. We're actually going to sell more puts than calls that we're buying. So in this case, we're selling two puts for every one call that we purchase. That way we can get a credit in the trade, because with a bullish risk reversal, the way I like it to happen is that even if the big move, the big rise that we're looking for doesn't happen, even if it goes sideways, we could still get paid for the trouble, right? We're not in it for that initial credit, but I like to have that situation. So we sold the January 80 puts today. We sold 2 of them, and we collected approximately $4 per contract. 2 of those, so let's call it $8, right? We bought one January 105 call, paid $4 for that. I'm sorry, $7 for that. When you net it together, we're left over with $1, and there's our position. Do you want to pull up that the P&L graph so people can get an idea what that looks like?
I want to talk real quickly about this. What my original suggestion was let's sell some puts now, and if we get a pullback in the stock, we'll sell some more puts because we're probably going to get even more. And then you're like, why don't we just sell them all now, right?
Well, there's a couple reasons why I felt that way, JC. Number one is I don't want to have to I don't want to babysit this position and wait for better opportunities to get in. That might be a good move, but it doesn't jive with the way I like to do things. But more importantly, JC, is that the volatility in the options right now is still pretty juicy. So we're getting a good premium to sell the puts. But if SQM starts selling off, do we really want to be selling more puts into a sell-off? I don't know if I'd feel comfortable with that.
Just from the simple reasoning of only losers average down losers, and
exactly,
technically, even though you plan that in that scenario, you're still technically averaging down a loser, which makes you a loser.
And JC, also, that is correct. And also, that I like to sleep well at night, and selling puts into a downtrend does not help my sleep.
Fair. Especially when you're using those proceeds to buy out of the money calls, right?
Yeah.
Okay. So that, and I was a little bit surprised that you were okay with that. because you're not one to break rules. So I wanted to ask you, are you technically breaking any rules or just going against maybe a little bit of tradition? Can you talk about that?
You're not a rule breaker. Well, I kind of mentioned it before. There's no law that says a bullish risk reversal has to be 1-to-1, right? That's just the way I like to do it. That's the way I've always done it. It's simple. It's clean. But in this case, I don't think we're breaking rules. We're just taking advantage. We're working with the market that we have. Okay. And by the way, we should point out that
is that what we're doing? Are we adapting to the market environment? Is that what's going on here?
To the market environment we have. Yes. And we should also point out that the reason why we chose the 80 puts to sell is because that corresponds very well with recent support that's been holding up the stock over the last, let's call it 4 months. And if that support level breaks below 80, that's a pretty clear signal to us that we're either early or wrong in this trade, and either way we want out. So that's why we chose the 80 strikes. I just wanted to make sure people were clear on that.
And then just a little bit further backdrop, the relative strength in this particular name, despite the selling pressure in emerging markets, particularly Chile, because remember, SQM, maybe not remember, you might not know, SQM is a Chilean stock, Sociedad Química y Minera de Chile, SQM, and the fact that Chile as a country, what?
That just rolls off your tongue. I love that.
Well, I would love to go to, we should all do a field trip to Chile and drink the wine. They do a nice job down there. Shout out to my friends in Chile. But the bottom line is emerging markets in general have gotten hit. Latin America in general have gotten hit. Chilean stocks in general have gotten smoked. And look at its largest weighting, essentially a quarter of the entire index. And it's breaking out of a huge base to new all-time highs. Been breaking out. By the way, this is not a name that's new to the All-Star Charts audience. Even Shani, who doesn't exactly look like a lithium Chilean mining.
Don't?
What is an expert in Chilean lithium stocks looks like? I wouldn't say it looks like Sean.
Probably some nerdy glasses,
This is a name Sean's familiar with. We talk about it all the time. It's a leader, regardless of whether you're talking about emerging markets or Chile or otherwise. It's a name that's constantly popping up on scans. It's worked great for us in a tough tape. For me, the relative strength is off the charts, pun intended. So we like to lean bullish towards a name like this, but we want to not have to pay too much money to get exposure. If we can have the market, we can collect money from the market to help pay for the trade. In this case, pay for the whole trade because we're taking in a dollar credit. Do I have that right? It's a net dollar credit?
It's a net dollar credit. That's what we got for today when we put the trade on. Now, I should...
Risk management.
A little sidebar here real quick is that it's important to bring this up. It's that time of the quarter where there's lots of earnings reports going on. And that's been something we've been struggling with because a lot of our favorite setups right now are all in stocks that have earnings reports in the next week or two. Yep. SQM does have earnings coming up, but it's a little ways off. It's, what is it, November 16. So we got 3-4 weeks before that earnings report. But I'm of the mind here, JC, that if we're wrong in this trade, we're going to know pretty quickly before earnings. So that's why I'm a little bit more comfortable with this one. We have time to build some cushion.
Okay, fine. Let's say the stock's right here before earnings. Are we pulling the plug?
I think we're staying if we're right here. If we're
lower, we're pulling the plug. Too much risk.
Yeah, if we're getting close to down to 80, getting down there, I think that's where we gotta.
And any closing price below 80, all bets are off.
For sure.
No matter what. No matter whether it happens later today or in 2 or 3 weeks, right?
Correct.
And then let's talk about taking profits, right? In the off chance that we might get this right, what does success look like?
So in this trade, because we're doing it unbalanced, what we're going to do here is we're going to win one of two ways. We're going to win because SQM does not break below 80. And at the worst case scenario in that situation is both of our option strikes expire worthless and we keep the $1 credit that we collected today. That's not what we're playing for, but we'll take it, right? Better than a sharp stick in the eye. However, if SQM does make a run at highs, which are right around 115, I believe, then our calls will be in the money. And JC, we've got a potential for unlimited gains in that situation. And you mentioned during our call this morning that if we're going to see a pullback in the dollar, that you have a good feeling about this one really ripping. And so we're not, in this case, JC, we're not going to be looking to take profits. We're going to let this thing ride.
I mean, listen, I like it. This gives us until, these are the January calls, January 20th. This is 3 months away. By the way, we are entering the strongest 3-month period of the year for stocks. Next week, we enter that period, and these options expire towards the end of that period. So we have seasonality at our backs. We're coming off some of the worst sentiment in American history for equities. And I think you nailed it. I think on a weaker dollar, I think this is going to be a big winner. I think on a weaker dollar, there's going to be a lot of big winners, by the way, just to be clear. So, to my point, it's harder to screw up, right? But even though it's harder to screw up, you'd be surprised. People find ways. I think a more direct play is in probably some kind of materials play, is probably going to be one of the bigger winners. And the fact that Sociedad Química Minera have shown that relative strength already, if you ease up on that dollar strength, that pressure that dollar strength is put on in equities, particularly these, and emerging markets, which have been showing outperformance out of relative to the developed markets, there's something there. And the fact that lithium stocks in general have been some of the strongest and held up some of the best across the board doesn't hurt either. So you just got a lot of check boxes. It doesn't mean we're going to be right. Doesn't mean it's going to change our lives. We can get stopped out tomorrow, but we're stacking the odds in our favor. And I like that.
Yeah, we have a lot of things that the chart all by itself, just looking at this chart, is a bullish setup. These are the kind of setups I like to play. It doesn't look like other charts. It stands out, and if we get a rally in the broader markets, there's no reason to believe that this will not be a leader. And oh, by the way, I don't know if you've heard, but electric cars, electric vehicles, kind of a big deal. Government's pushing for more of that. They need lithium.
I guess
this isn't a long-term play, but still, it's nice to know you got that in our back pocket.
That's what I hear. I don't know about all that. I know they're buying these. I don't know why they're buying it. That might be the case. It might not be. That's not really my problem, right? They're buying these stocks, and that's good enough for me. I like this trade. It's a riskier reversal. This is right? It's not just a regular one-to-one risk reversal. This is a riskier reversal, and I'm okay with that, right? Position size accordingly. Breaks 80, all bets are off, right? Like there are rules. Like this isn't NAM. There are rules, Sean.
This isn't now. By the way, also side note, some of our customers have been emailing me in our chat asking about this trade, but mentioning they were having a hard time getting fills in this at the credit that I mentioned. They wanted to get that $1 like what I traded, but the important thing here in this trade, don't get hung up on trying to get $1. You might get $1.05. You might get 80 cents. You might get 75 cents. We're not so worried about how much the credit is. We just want to have a credit of any kind because we want to at least get paid for holding this thing if it goes sideways. So,
by the way, half the time I'd argue, you probably have better stats on this than me, but half the time I'd argue you get a worse fill than people reading, right? Like it goes both ways. It's kind of like around $1. You could get more, right? You might get a little less, right? But I think it all evens out at the end.
For sure. That's the nature of the beast.
That's it. All right. So a riskier reversal on the old SQM, little Chilean lithium for your portfolio. How you doing? I appreciate everybody being here. I'm JC Parets. This is Sean McLaughlin, and we will catch you next week.